Sonny with me this morning. He ran up literally and tried to climb up my leg because he wanted to say hi to all of you. So again, this is Saturday, September 24th, and this is your daily financial news. Couple quick things about Saturdays. Saturdays are very special on this channel, one rental at a time. It is the day we give back the most to you. We obviously start with this daily financial news show, which hasn't stopped for 1,000 plus days in a row. Then we roll into an 8 a.m. live Q&A where you ask your questions, you say hello, we get to know each other even more. And then what we do a lot on Saturdays is a deep dive session. Yes, these deep dive sessions are just for my students, but we give it all away right here on this channel, 9 a.m. tomorrow. Today, we are talking about out-of-state investing. For my students watching, remember we are starting at 9:15, not 9 a.m. We're starting at 9:15 because the one and only Brian Adamson is finishing an event, and we wanted to make sure he was not in a rush. On top of having the amazing Brian Adamson, we are having the one and only Millennial Mike, who is a routine guest on this show. So should be a lot of fun. Remember, 9:15, not 9 a.m. So again, we give back a lot on this channel. Saturdays are a special day. We will have Rylas Dana next Saturday, deep dive, 9 a.m. to talk about probate. I suspect we will be talking about probate from two ways. One, how to protect yourself, your family from the probate process. And then two, how do you work with probate attorneys? How can you find deals in probate? Lots of ways we can take this. But again, if you want to be a part of these discussions and ask real questions of the experts, you must be a student. But if you don't have the $320, no harm, no foul, it will always be available 9 a.m. the following day. We're not putting something that we're not giving away to everybody. So enjoy. Next, I got a question for you. I have a question for you. We are entering a worldwide recession, in my opinion. I think there is a general belief that the consumers around the world are retreating. We've already seen it in China. We are seeing it in Europe right now. And undoubtedly, I believe we will see it coming in the United States. We have two amazing, spectacular, wonderful companies that produce amazing products that happen to be on the higher price point category. These companies, of course, are Apple and Tesla. I am just sitting here looking at the forward environment, thinking consumers might retreat, think that consumers might delay or skip a release. No idea. But I am wondering, which company will pre-announce first? Let me know below. I'd love to hear from you. I know there's lots of amazing Apple fans, lots of Tesla fans, but with the worldwide recession, with high price points, with huge growth expectations, with supply chain issues, with cost, you have to think that the possibility of one of these perhaps, maybe having a pre-announcement is at least possible. It's not unheard of. So if you had to guess, just a wild guess, who do you think pre-announces first? Is it Apple or Tesla? Leave your comments below. Again, just have some fun. Take a guess. Nobody's going to remind you, but let's just interact with the channel. Get the comments going. Comments really help the YouTube algorithm. Remember, like, subscribe, comment. Let's get this channel and the daily financial news in front of more and more people. Your comments, Apple or Tesla, keep them coming. We will undoubtedly get lots of comments, and let's see what people have to say. I don't know if you guys know this, but I believe Jerome Powell is soon to be, if not already, the most hated man in America. And I say that with all seriousness. I believe he is aware of that. I believe Jerome Powell knows in his soul that what he is doing is going to cause pain. The amount of pushback and hate and dragging of name that he is about to experience has, in my opinion, only been felt by one other person. His name was Paul Volcker. I don't know if you guys have gone back and read articles from the 80s. I have. Think about this. In the 80s, the internet wasn't a thing. The internet wasn't a thing. Social media wasn't a thing. Paul Volcker was still getting death threats. His life was threatened because of what he was doing to interest rates. He took the country into a recession, then pulled back, and it went into a double dip recession, which Powell wants to avoid at all costs. I cannot imagine the amount of external Monday morning quarterbacking, the bad words, the hatred that is coming Powell's direction. I believe he knows it's coming. I believe it's coming even more than he expects. If the stock market continues to tank and interest rates continue to rise and housing transactions go down 50% and there's pain in the 401ks and all of this wealth destruction, not only is every billionaire going to call for his head, you are going to have mom and pop calling for his head. You are going to have the president of the United States berating all of these things. I think he knows it's coming. You can argue he was late. It's not an argument. He was late, but you and I don't have a time machine. We have to deal with what we have today. And Jerome Powell either causes sharp pain today, rip the Band-Aid off, or a lot more pain over a much longer duration. We are where we are. It is going to suck. I have been warning you for months this is coming. But again, remember yesterday's theme. Pain is right here. Opportunity hides behind. All of you have thought or even told me, Michael, I will be ready this time. Let's see. Show me. It's hard for people with pain right in front of their face. I've been here before. I know what happens. Do the work. Understand what's happening. This too shall pass. Remember, Greg Dickerson always says, good times never last, bad times never last. We are here. It is going to be bad. 2023, without question, could be the worst economic year of my adult life, and I have seen a lot. Take a breath. Stop watching depression videos. Depression, crash, blah, blah. Those people are trying to make money off your fear. Remember, opportunity hides behind fear, hides behind pain. Take care of your micro universe, always, but do the work. Some of you will buy amazing stocks in the next 12 to 18 months that you will hold for decades. Some of you may buy crypto at significant discount and hold for decades. Some of you may buy real estate with seller financing at stupid low interest rates and hold for decades. But most of you will probably get caught up in fear and do nothing. Ask yourself, are you doing the work? Are you clicking on Graham Stephan's depression video? Are you clicking on Meet Kevin's, housing crash 2.0 videos? Do the work. Do the work. Great deals are out there. They are not easy to find nor easy to create. But if you believe in your soul that they are out there, you will find them. That's what I believe. Cathie Wood. I saw a headline. I think Tom Nash did this. Another guy on YouTube that I watch. I think he's great. I think he's funny. Tom Nash put out a video the other day that I had to watch. Cathie Wood is stepping down. I'm like, oh my God, Cathie Wood is quitting? Well, he got me. He got me. Turns out that Cathie Wood runs 9 ETFs. She's actually giving 2 of those, the smallest 2, to, I guess, her direct reports or portfolio managers. Cathie Wood, without question, had to be overworked. I don't really see this as Cathie Wood stepping down. I see this as really Cathie Wood realizing she can't keep running 1,000 miles an hour. And as you know, I'm not a huge Cathie Wood fan. I believe her calls over the last year have been horrible. I believe she is essentially begging for Powell to stop. She's not on the right side. But I think giving up 2 ETFs to balance the workload so she can focus and do whatever she does, I think is the right call. Good for her. High-end crash. I don't know if you've seen this, but Redfin put out some articles which I have dug into about the high-end market. High-end being 2x the median for your market. The high-end market, or luxury homes, as it was called by Redfin, was down 28% in transactions. That compares to non-luxury being down 19.5%. Remember that horrible and wrong value call I had about August home sales? Remember, I called 405. It came in at 389. I admitted I was wrong. This is why. I've been digging for what happened. It turns out that above the median crashed harder. 28% drop above the median luxury, where below the median collapsed only 19.5%. And if you take more off the top and you add more to the bottom, you get a big drop in median home sales. That is why I was wrong. My assumption going into the median house print was first-time home buyers would be hurt more than luxury buyers. That was my fatal error. My assumption that the well-to-do, the rich, the whatever you want to call them, would be less impacted because they could buy for cash, they can trade, whatever. I was wrong because of that fact. Luxury down 28, non-luxury down 19. Hence, the median gets pulled lower. I feel better today having read that because I'm like, how the hell was I so wrong? That is why. So we will see. We will see if that holds going forward. With rates getting to and going over 7, again, my assumption, and again, as we saw last month, I was wrong, is eventually that's going to hurt the first-time home buyers more than luxury buyers. But in August, clearly wrong. But at least I know why I was wrong now. Thank you, Redfin, for helping me out. Just so you know, if the luxury market was down 28, there were a couple of markets that were down a lot more. Oakland, California, luxury market, down almost 64%, 63.9 to be exact. San Diego, California, and San Jose, California, down 55%. Yeah, luxury, no bueno, not good. If you are flipping 2x the median, be very, 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 very careful. This is not the time. Don't take that risk. Don't do that deal. It is better sometimes in investing. It is better not to do the deal than do the deal. Maddie, thank you very much for the super chat. Yes, I actually enjoy this stuff. I would do all of this reading even if we didn't get a chance to talk about this stuff. I don't know what it is about my head, but this stuff is fun to me. It's fun. Hopefully it's fun to you. Hopefully you guys enjoy this. Like, subscribe, comment. Maddie, thank you very much for the super chat. High end. Oh, bear markets. Hopefully we talk with Dan Bird tomorrow. It is not guaranteed, folks, because I don't know if you've seen the news, but there is a hurricane in I think it's the Gulf of Mexico that is coming up and maybe impacting Florida at some level tomorrow. So Dan may be scrambling. We obviously want to talk to Dan. We had a rough week. We're bouncing out the bottoms. Believe me, Dan and I both want to do our video tomorrow. We're just not sure if Mother Nature will allow it. So fingers crossed, everybody be safe. Let's hope the hurricane goes away and it's just a bunch of wind, but we shall see. So the longest bear market, do you know what the longest bear market is? Some of you, like me, if you were to ask me, I would have guessed the dot-com crash. The dot-com crash, depending on how you count it, was 6 to 10 years. I invested through that. It was horrible, specifically for the NASDAQ, which is what bit me in the butt. But there was a bear market that ran from 1966 to 1982. 66 to 8. The entire decade of the 70s, bear market. Think about that. That is ugly. January 1966, the Dow hits 983. Closing high. It doesn't break the closing high of January 1966 until October 82, when it closed at 991. Buying the indexes and holding through that period was 14, 16 years of nothing. It was a stock picker's market. And I wonder, just a guy who owns no stocks, I wonder if the next decade is like the 70s, where there will be amazing companies. Apple, Home Depot were born in the 70s. Will there be amazing companies created in the 2020s that didn't exist before because of the recession? Is this the market where you always just buy the SPY or the triple Qs or whatever? I have no idea, but you got to ask yourself a question. The longest bear market? Whew, that was painful. And I ask this because, again, Stanley Druckenmiller, somebody I follow, has said he expects to have a flat decade. I don't know. Pretty crazy. So again, let's see what else I got. Oh, thank you very much, folks. We broke 38,000. We are less than 12,000 subscribers away from having a party. Like, subscribe, comment. Remember, 50,000. We got, I don't know, what is that? 11,968 to go. At the pace we're going right now, that's probably June. If you can help me out, share the channel, tweet it, post it, whatever. Maybe we get there in March. But right now, if I had to guess, it's probably June. We're averaging about 1,200 to 1,300 subs a month. My channel is not a fast-growing channel, but because I tell you the truth, I talk about pain and opportunity. I don't preach fear. A lot of those fear channels are growing crazy. Depression 2.0, housing crash, not my thing. Fear is already right here. This is where opportunity lives. And I want you to see through the fear. I want you to step back. I want you to change your family's future. I don't care what asset you pick. Figure it out. Do the work. Get a shopping list. Let's be better every day. So again, folks, have an amazing day. I will be back in a few short minutes to do 60 minutes of live Q&A. Then again at 9:15, we will do a live conversation with 2 out-of-state investors answering your questions. So have an amazing Saturday. Every day is Saturday, especially on Saturday. Bye-bye.